Hello everyone, Chris here with the Groff team. Welcome Mortgage. And this is my 2016 housing market review part 1. Part 1 is going to be more or less what happened. Part 2, tune in next week if you're not too full of eggnog and gingerbread cookies to really see what we think this information is going to take us into next year. And so even though it's a 2016 review, really where are we going to go from here will be my 2016 part 2 next week. So diving right in. This will be a little bit longer than usual, so I appreciate your patience, and I'm going to do this old school here. But here's what we got. So this is last year, and I have my screen right here so I can know that you're actually able to see this. But this is then last year housing inventory levels from 2014. So you can see we started to head down. Inventory levels being lower than typical. Heading into 16, even worse. And so you can see that year over year from the already bad 15 to 16, even worse inventory levels. And this is nationwide. And so really, Flagstaff market is very, very similar. It's not my area of expertise, but talking to a real estate agent and asking in the certain areas you're looking at, you're probably going to hear something like this. And so, there's lots of different thoughts from that. Population growth, extremely high demand. Thought this one was kind of interesting here. The fact that people are living in their homes for longer, probably a post-Bevel syndrome there. That's starting to come back down a little bit, but still very, very high inventory. Or sorry, very, very low inventory, creating some strain on that supply and demand. So with very low supply, demand being very high, that's where we get to right here. So, oh, I lied. Right here. So this is price change year over year for 2016, and this is going to be then based. You can see different quartiles here. It gives you a quick snapshot there, but this shows you more specifically state-based. You see Arizona down at a 6.7%, but very relatively high appreciation levels still. I think most agents would tell you in Flagstaff that we're even above that 6.7% in most areas and quartiles of the market. But again, that low inventory and high is very strong demand, pushing those sales prices. And part of that demand factor has been, let me show you this one. This is where rates got revised to. So when we were in then the about third quarter or so, they put these projections out, the second or third quarter of 2016, and revised down to say, hey, by heading into 2017, we'll be sub 4%. This is actually, I showed this last time, the chart before this, at the first of the year, actually putting us up more accurately to where we currently are. Rates are about mid 4% range, and you can see that low rates help that demand out, but it's really been a crazy year. To summarize all that information up, it's been a very, very hot market. It's been frustrating for a lot of people because the pace of the market is very quick. Multiple offer situations, houses going and selling very, very quickly, and so it's creating some interesting perspective, which we'll talk about in part 2 of what's going to happen next year. There's a lot of fear of bubble, where prices going, where rates going. There's a lot of things to really be aware of, and I'll be able to share with you in part 2 where, if we think 2017 is going to be a good year, where the silver linings could be, and we'll go from there. All right, bye.